Now, Bank of America representatives had said they hoped to name a new CEO by Thanksgiving Day. Then earlier this week, some informed sources said the bank might ignore that target date if no suitable chief were found. Joining us with his take on what might happen next is Anton Schutz, president and founder of Mendon Capital Advisors. As of September 30th, that firm owned over 370,000 Bank of America shares. Anton, let me ask you first of all about the CEO search. I mean, does it really matter? A lot of people have said they can run on autopilot pretty comfortably well into next year.
Well, I mean, that's somewhat true because they have tremendous talent, in middle management and certainly have the ability to run all those divisions. There's no doubt about it. There's lots of people who can step in when someone steps out. However, certainly one of the big impediments here has been the overhang of the government, the overhang of TARP, working with the regulators. And I think it's critical to get somebody in place to get the government paid back, to work, with the government well, and to, if they need to, get another share offering here to get it done. And I think the stock will actually perform very, very well if we can get all those steps in place here. On
that note, is it difficult to find a candidate who really wants this job? I mean, all of the regulation, all the scrutiny that he'll be or she will be under, and then, of course, the pay package will probably be limited. Is it a problem to find a good candidate?
Well, I mean, the funny thing is when I walk into a room of people and I ask them who the best bank CEO is, and everybody says Jamie Dimon, and then I ask who's number two, and there's silence, I think that's interesting. So certainly by reputation, there's not a lot of well-respected bank CEOs out there. Now, if you look down the food chain and you talk to the people who are number two at places like JP Morgan and PNC, who've been rumored to, been on the search committee's list, the problem is where the pays are, they've got to buy out what they already have at their existing companies, and certainly, whether JP Morgan allows a Charlie Scharf to leave would certainly be another question. So it's not that easy to poach those kind of people where the pays are as well as non-compete issues. But, my point is I think they've got plenty of talent at Bank of America, at Merrill Lynch, to be able to pull somebody in and run this company. And I'd rather actually not disrupt things. And I'd rather see a Brian Moynihan run this company.
Let me ask you quickly about the shares. John Paulson says they'll double by the end of 2011. Meanwhile, Mike Mayo says they should only be worth $12. Where do you think the shares realistically could end up, say, by end of the next year?
I'm in John Paulson's camp. I certainly think there's a lot of upside to these shares.
But there are risks, Anton, right? I mean, you've got the
Absolutely.
risks of combining Merrill. You've got the risks of combining Countrywide. You've got declining home values. You've got higher unemployment. I mean, it's worse than the stress tests have anticipated, or at least at that level already.
Well, I mean, the stock's where it is for a reason, that there is risk. And obviously, anytime we talk about a stock that has the potential to double, you're looking at something that's got high risk and high return. But I also would counter that they do have plenty of capital, if you include the TARP capital, which is capital. They also are leading market share players, whether it's in deposits, in investment banking, in mortgages, and quite frankly, both Merrill and Countrywide are contributing a great deal of profits to this company right now.
The stars.
I mean, Merrill's underwriting tons and tons of bonds and equity offerings, and certainly, the prior segment, you talk about mortgage rates. I mean, boy, Countrywide's humming.
Got it. All right. Hey, Anton, thanks for joining us. Anton Schutz there at Mendon Capital Advisors, talking about Bank of America.